Mark, does Apple highlight how much more revenue guidance and uncertainty we could really start to see from a lot of these companies?
Well, they're clearly ahead of the game. They're really the first big tech company to mention Corona's impact in the current quarter, and I don't expect them to be the last. It's amazing how resilient the market was today. I mean, you would have guessed, because we got a long preview with the market close yesterday about that, and lots of speculation on chat boards, et cetera, how bad the market would be today. And look what happened. The NASDAQ was up today. So it shows you the amount of liquidity that's in the market, the amount of demand that's in the marketplace. And frankly, there must be a lot of people short the stock, because there's just clearly nobody was expecting the stock market to be slightly up today on the NASDAQ side.
What is driving the resiliency of these tech markets?
Well, you clearly have numbers that have been as good as people expected, if not better. You've got rates really dipping this year. I mean, you look at the 10-year from January 1st to today, it's been an enormous ascent in terms of the bond. Conversely, of course, the yield has gone down. And I think there's just a lot of liquidity in the marketplace. And these kind of liquidity bubbles, if you will, and I don't want to use that word bubble as pejoratively completely, there's a lot of people who have been waiting for a correction and waiting for a correction and waiting for a correction, and we just haven't seen that. I mean, we saw it at the end of 2018. We just haven't seen a big correction. We've seen this ascent through the end of last year, and I just expect more and more people have, quote unquote, capitulated into this year, despite some news like Apple's. That's obviously a negative to the market.
Mark, these supply chains, however, are so huge and interconnected. Is all the bad news around the supply chain out of the way yet? Because, you know, as the saying goes, there's never just one cockroach.
Well, you're right, and my guess is there's not. All the news is behind us. I think there's going to be more news ahead of us, because everybody has been anticipating that those numbers that you mentioned earlier about the number of deaths and the number of new cases to go down precipitously at some point, and frankly, that has not happened. I think the longer this goes on, where we're highlighting the lead story on your news show, how many new cases there are, the longer this virus goes on and the longer supply chain is afflicted. And I would expect more news rather than less news going forward. Fortunately, it's a seasonally slow period. We clearly had the Chinese New Year at the same time, so it's a seasonally weaker period for tech. But that supply chain takes a long time to ramp down, and like a good engine, it takes a long time to ramp up. So I'm expecting more announcements over time.
Before the virus outbreak, of course, there was the trade war as well. Are the arguments starting to pile up now for more diversified supply chains for major tech companies?
Well, they clearly are, and you're going to read about those in hindsight. I think you're going to see the economies of other parts of Asia, Vietnam, Malaysia, other places that are just clearly going to explode. They have the workforce, they have less of the trade war worries that we've talked about, and there's just a more level playing field, I think, that some of the companies will have to pay attention to. And I think you're going to see that theme play out over the next few years, and like you said, they keep putting more reasons to do so. I think they were already ahead of this. The virus is just another reason. And as a reminder, this is a terrible affliction, obviously, globally, especially in China. But the flu season always starts in China. We read this every year. It starts in China. And so everybody knows that. And certain years it gets worse than others. This happens to be one of those. And so I would expect that to be a very big theme going forward. And obviously it takes a long time to play out.
You mentioned the 10-year yield earlier. Does the wall of money coming from overseas push the bond yield down, price higher, above fair value?
Well, I have been a bond bull for a very long time. I've been quoted on the show many times that just says when it was worries that the rate was going to go to 3, I've been very optimistic that the bond yield would stay low, particularly because the global rates are just so much lower than even ours. I think there's a lot of liquidity. We've seen the dollar strengthen against the euro in an enormous way in the last 6 months. And I would expect that kind of flight to quality, the 10-year, the U.S. economy, what's going on here, to continue to push more money into our marketplace.
Another tech stock that has brushed off really all of these concerns, especially around some of the demand in Shanghai, has been that of Tesla. At $858 on Tesla, can they meet those expectations and deliver the 500,000 cars with that Shanghai production facility?
My guess is this year is going to be tough when you have basically China shut for the year. I think investors are looking past China and looking past that 500,000 number going into the rest of 2020. They're looking beyond it. We're already pricing in 2021. For all those Tesla bears, and if you're not subscribed to some of them on Twitter, especially in hindsight, to read what they've been writing over the last 6 months to a year and watching the way the stock has reacted, it has weathered so much. Obviously, a secondary that was priced last week. Obviously, some news a year ago about the demand for the Model 3 and Elon Musk's own machinations. I think we're looking into 2021 and beyond for that stock. Look at the action, obviously, today and the post-secondary. God bless them. They've done a great job.